Welcome back to the Deep Dive. We're here to really cut through the noise and give you some actionable insights.
Glad to be here.
Today, we're jumping into an investment analysis of AppLovin. That's ticker APP.
And our main source today is a pretty detailed report from someone called Trader Jinlog.
Right, Jinlog. And they use this unique approach, the VPAR Rhythm Method.
Exactly. It's quite distinct. The idea isn't to react to, every little market wiggle or news flash. It's more about seeing the bigger picture, the broader market cycles, and finding these very specific moments.
These pivot zones.
Yes, pivot zones. Or, as the report originally terms them in Korean, sha, makjim. These are points where, according to the method, big events are likely to cause real moves.
Okay, so our mission today.
Basically to unpack what Jinlog is seeing in AppLovin right now. We'll look at its position, the financials, and the strategy laid out for potential investors like you.
All right, sounds good. Let's start with the current price action then. AppLovin, Jinlog notes it recently got back into the upper $400.
Yeah, trading near $463.79 after quite a quick run-up.
So naturally, Jinlog mentions some short-term risk there, like it's gone up too fast.
Potentially, yeah. They flag a short-term extension risk, maybe even suggesting a 3 to 5 day window for a possible pullback.
Okay, but for listeners maybe thinking, it's already run up so much, what's underneath? What about the company's actual health?
Well, that's where it gets interesting. AppLovin's Q2 2025 numbers were, frankly, quite impressive. Revenue hit $1.259 billion. That's up 77% year over year.
77%, wow.
And maybe even more striking, adjusted EBITDA was $1.011 billion. That's an 81% margin.
81. That's huge for margin.
It really is. Plus, strong free cash flow, $768 million. The report frames this whole picture as an AI-centric, high-margin ad stack.
So Jinlog sees this as more than just growth. It's like a structural advantage tied to AI.
Precisely. They see it as AppLovin really leveraging AI effectively within the ad space, creating this very profitable model.
That kind of performance, especially the margins, really makes you wonder, doesn't it? How much gets missed if you only follow headlines and don't use a methodical analysis like Jinlog's?
It's a fair point. Headlines often miss the underlying financial engine.
So, okay, given that strength, how does Jinlog view the investment case? Is it just buy now, or is it more layered depending on time frame?
It's definitely nuanced and conditional. Short term, the outlook is positive.
Okay.
They expect a retest of the $500 level, but after maybe a bit of a breather, potentially down in that $440 to $455 zone we mentioned.
Right, the pullback zone. What about longer? Swing trading.
For swing, it shifts from neutral to positive. But, and this is key, it's contingent on the stock finding clean support around $390.
And it needs something called trap resolution. What does that mean exactly?
Yeah, trap resolution.
Yeah.
In Jinlog's framework, it basically means any selling pressure that might have caught earlier buyers. Well, that pressure needs to be clearly gone, absorbed. It signals the coast is clearer for an upward move.
I see. And if that happens?
If those conditions line up, the target for that swing move is $610.
And midterm? Still positive?
Midterm outlook stays positive, too. That path towards $610 looks viable, provided, the company's guidance stays strong and the free cash flow keeps up.
This really highlights the precision Jinlog aims for with these pivot zones, or makjim. Can you elaborate a bit more on how an investor should think about these levels? Are they just lines on a chart?
Good question. Think of them less as just lines and more like strategic checkpoints, like coordinates for navigating.
Okay.
So Jinlog identifies $339, for example, as a key zone for potential reaccumulation if you're looking at a swing time frame.
Meaning a place where strong buying might step back in?
Exactly. And then there's $200, which is seen as a really deep structural defense level for the midterm, kind of a worst-case floor.
That kind of precision seems incredibly valuable. But how does Jinlog suggest confirming these zones? You don't want to jump in on a false signal, right?
Absolutely. And the report addresses that. It details specific entry tactics.
Like?
Well, for a short-term long, it suggests maybe scaling into that $455 pullback we talked about, but only if you see what they call tape repair.
Tape repair?
Yeah, essentially seeing clear technical signs that buying interest is coming back in a sustained way. It validates the pullback.
Okay, confirmation.
And for a swing long, waiting for that $390 resupport would also involve similar checks for renewed buying strength. It's not just the price level.
Got it. Are there other factors mentioned, drivers or risks?
Definitely. Things like improvements in their AXON 2.0 tech and the integrated stack are seen as momentum drivers. But risks are there too: potential valuation hits, regulatory changes, privacy policy impacts, all standard stuff to watch in this space.
So wrapping this up, what's the big takeaway for you, the listener?
Mm.
Jinlog's analysis provides this, well, multi-layered view of AppLovin. It's blending the financials with this technical rhythm analysis.
Right. It's very systematic. They're looking for clear signals, not just general feelings about the stock.
And understanding these kinds of detailed approaches, like the VPA Rhythm Method, it gives you a much more robust way to evaluate what's happening, doesn't it? Compared to just reacting to the day's news.
Absolutely. It offers a framework.
Of course, we have to include the crucial reminder from Jinlog's report itself: nothing herein is investment advice.
That's vital. All decisions and ultimately all responsibility rest solely with you, the investor.
So here's something to think about. How might really understanding these deeper methodical approaches, getting beyond just the headlines, change how you perceive and maybe even act on complex market information?